Apple yesterday disappointed investors. They did not detail a big plan for their $100 billion cash hoard. Was that a mistake? Mark Hulbert is with us. Market Watch's Mark Hulbert is with us to talk about it. Good morning, Mark. How are you?
Okay, how are you?
Good. So let's talk about Apple. They have a ridiculous amount of money on the books, $100 billion. For years, people have been talking, as it's been growing, people have been saying you have to do something, you have to do something. They haven't done anything with it. Are they doing the right thing by doing nothing?
Well, it turns out if you go back and look at history, the lesson would seem to be an answer of no. In fact, they ought to distribute it. The argument basically is that much cash represents huge temptation to do something. That they have done something with that money that was better than let it sit and earn virtually nothing on the books at current interest rates. So the something.
We are having some trouble hearing Mark. Mark, pick up a phone or something. We'll,
Yeah.
There you go.
So basically, yeah, what I was saying was that that much cash on the books represents huge temptation to the management to do something. And they have to show that they really were smart to keep that much on the books, even though it's been earning next to no interest at current interest rates. And so that kind of temptation leads them to do something probably foolish. At least other companies historically, on average, when they've had that much cash, they have done something that they've ended up regretting. And when they end up distributing the money to shareholders, who after all are the rightful owners, then that temptation has been taken away. So at least the lesson of history is that Apple ought to distribute it as a dividend.
What it seems to make sense then, really, Mark, that if a company does focus on dividend growth, then they're going to be focusing on the aspects of the business being strong, the strength of their business being able to produce that dividend growth. And if you look at it, it's like looking at physical fitness of an individual, and another person's kind of just sitting around and being fat, dumb, and happy. And is that the sort of the risk that Apple faces if it doesn't maybe do something with this big cash hoard?
Well, that's right. If they could find areas in which they could invest the money that would produce a better rate of return, then indeed they would be better off investing it in future development. But that's what they have not been doing. And it's what I was saying. The pressure is on them to go ahead and do that sort of thing. If they distribute the money to shareholders and then they find some unbelievable opportunity for investing it, then at least finance theory would say they have to go to the marketplace and submit themselves to that discipline in order to determine whether it's worthwhile going forward with that project. And at least according to theory, they'd be better off subjecting themselves to that discipline than sitting around with that much cash on their books.
I mean, but Mark, let's be for real. We're talking about $100 billion. And I know in the past, Steve Jobs he always felt that it was that money was a strength. It was a bulwark to have it on hand. But I mean, it's $100 billion. They could give out a fat dividend and still have tens of billions of dollars to sit around and buy whatever company they want. Can't they do both?
Well, of course, and
I'm
indeed,
not
we're not talking all or nothing here. But the fact that they have $100 billion and have not done anything with it is back to this area of temptation I'm talking about. The pressure must be intense on management to do something, and something as tempting as that, basically to do something, even when it perhaps is not, just to show the world that they've done something, is that temptation to do something that is not really in the company's long-term interest.
So what forces this issue, Mark?
Well, eventually it's going to start becoming a drag on the company's performance, I think. So there's that, and then the other thing is if you start seeing them, for example, get involved in M&A activity or do some other things that make you scratch your head and wonder where that has to do with Apple's mission and so forth, those will be some signals that perhaps they've started doing foolish things.
All right. Going to leave it there. Thank you very much, Mark Hulbert.